stop what you're doing. Seriously. If you're a retail investor blindly pouring money into famous AI chip designers just hoping for that next massive pop, you might be walking straight into a trap. It's a common fear, right? Buying at the top. But what if I told you the real bottleneck, and honestly, the true gold mine here, isn't actually the companies designing the chips, but the one building the machines that make them physically possible? It's like the ultimate picks and shovels for the AI gold rush. By the end of this explainer, you're going to have a clear framework to determine if Lam Research is the ultimate AI powerhouse or, well, a geopolitical time bomb. So let's dive right in. Now, you know all the famous names designing those AI accelerators. We hear about them constantly. But very few people actually understand the architectural foundation making them possible. Enter Lam Research. Think about it. If AI is this century's gold rush, Lam holds an absolute monopoly on the picks and shovels. They dominate these critical, microscopic processes that literally allow complex circuits to be etched and deposited directly onto silicon. And guys, this is not just some niche market we're talking about here. Look at this staggering number. A $140 billion projected wafer fabrication equipment spending boom. According to Lam's CEO, Tim Archer, this massive wave is being fueled heavily by the sheer, unyielding demand for AI infrastructure. So every single time a major tech giant announces, say, a new multi-billion-dollar data center, a massive chunk of that capital flows straight down to equipment manufacturers like Lam. All right, so here's our framework for today. We'll cover the AI equipment boom, check out their record-breaking financial performance, dig into their technology growth engine, weigh the very real China exposure risk, look at industry cyclicality and competition, and finally, wrap up with the overall outlook for Lam Research. Okay, let's kick things off with Section 1, the AI equipment boom. You see, the architecture of an AI chip is vastly more complex than your standard, everyday processor. AI demands insanely high-performance compute right at the leading edge, and it requires a massively increased amount of high-bandwidth memory, or HBM. And because we are literally hitting the physical limits of how small we can shrink these transistors, the whole industry is being forced to move vertically. They need advanced 3D packaging just to stack chips on top of each other. All of this drives a much higher intensity in the etch and deposition processes. Basically, it takes more steps, way more precision, and just more equipment per wafer, which, as you can guess, makes Lam-specific dominance in these areas absolutely essential. Moving right along to Section 2, record-breaking financial performance. The numbers here are just staggering. Revenue hit $5.84 billion in the March 2026 quarter. That's a 9% sequential jump and a massive 24% increase year over year. Diluted non-GAAP EPS also hit a record $1.47. But you know what's even more fascinating to me? Their customer support group alone brought in a first-ever $2.1 billion quarter. That means they aren't just selling these machines once and walking away. They're generating massive, recurring, high-margin revenue off an installed base of 100,000 active chambers. Now, I really want you to hone in on this number, 49.9%. Hitting a 49.9% non-GAAP gross margin proves Lam Research is doing a lot more than just selling extra equipment. They are capturing maximum value from every single sale. They're pulling this off through brilliant product mix optimization, basically selling higher margin tools for advanced nodes, alongside some incredible manufacturing efficiency. I mean, when your gross margins start knocking on the door of 50% in heavy hardware manufacturing, you are operating at an incredibly elite level. And for those of you looking for long-term stability, their track record of returning capital to shareholders really stands out. They have consistently grown their dividend for over 10 years now, boasting an impressive 22.65% 10-year growth rate. Currently, they're paying out $0.26 quarterly per share in 2026. This kind of consistent growth is a huge signal of balance sheet strength. Plus, you have to keep in mind, they ended that March quarter sitting on a robust $4.77 billion in cash and cash equivalents. That gives them immense financial flexibility. All right, let's jump into Section 3, Lam's technology growth engine. In the semiconductor equipment industry, there's a simple rule. If you stop innovating for even a single quarter, you die. Lam knows this, so they invest roughly 11 to 12% of their massive revenue right back into research and development. Look at fiscal 2025. That equated to nearly $2.1 billion. And this isn't just basic maintenance spending, okay? This relentless investment creates a massive, almost insurmountable barrier to entry for any new competitors trying to crack into the etch and deposition markets. So what exactly does a $2.1 billion R&D budget buy you? Well, it buys absolutely crucial breakthroughs. For instance, they've introduced the Vector TOS 3D system for advanced packaging, which enables those dense chiplet architectures that AI practically demands. They also launched the Akara platform to handle next-generation gate-all-around transistors, and they're deeply embedded in high-bandwidth memory stacking. Oh, and they literally won a Semi Award for their cryogenic etch technology used in 3D NAND. Long story short, they are actively solving the exact physical bottlenecks that AI data centers desperately need solved right now. As their CEO, Tim Archer, perfectly puts it, etch and deposition is synonymous with 3D. Since chips are hitting the physical limits of horizontal shrinking, the only way to add more computing power is to build upward, scaling vertically into 3D structures. And because Lam's absolute core competency is etching incredibly deep, precise holes and depositing microscopic layers of material, they are literally building the foundation of next-generation 3D chip architecture. But it's not all smooth sailing. Let's look at Section 4, the China exposure risk. Here is the major vulnerability we have to talk about. A staggering 43% of their Q3 2026 revenue is anchored in China. For comparison, the United States accounted for just 3%. While this huge chunk of business has driven incredible growth over the past few years, having this much concentration puts Lam Research directly in the crosshairs of escalating global geopolitical tensions and trade restrictions. We really have to impartially weigh this reality. On one side of the scale, you have the immense structural growth of AI demanding their equipment globally. But on the other side, there's the very real threat of tightening U.S. export bans restricting what they can actually sell to their biggest market. And this isn't just some theoretical risk. Expanding U.S. export controls already caused a tangible $200 million revenue hit for Lam in a prior quarter. Now, management has noted that China revenue is expected to be relatively flat moving forward as AI demand elsewhere takes over as the central growth story. Still, you can't ignore that the policy risk here remains substantial. Next up is Section 5, WFE cyclicality and competition. You know, the semiconductor equipment industry is famously cyclical. Right now, yes, we are in an incredible boom, but if this current AI spending frenzy by the big hyperscalers starts to peak, we could easily see an investment digestion phase that could abruptly pause chipmaker capital expenditures. On top of that, Lam relies pretty heavily on the memory market, which is notorious for wild periods of oversupply and price volatility that can suddenly halt equipment orders. Plus, Lam isn't operating in a vacuum here. They are battling some well-capitalized giants. Applied Materials is the massive industry leader with the broadest portfolio out there. Then you have Tokyo Electron, which represents a really unique threat. They have diversified offerings and, crucially, they benefit from more flexible Japanese export policies, meaning they might actually gain market share in China while Lam is restricted by U.S. law. And of course, ASML holds an absolute monopoly over EUV lithography, giving them immense influence over the entire manufacturing ecosystem. Okay, bringing it all together, let's look at Section 6, the outlook for Lam Research. Their strategic playbook heading into the second half of 2026 is remarkably focused. First, they're leaning heavily into pulling forward this massive NAND memory upgrade cycle as customers transition to 300-plus layer devices. Second, they're actively working to expand their serviceable addressable market, pushing to capture a much larger slice of total equipment spending by introducing brand new tools. And third, they're aggressively accelerating their advanced packaging segment. That segment alone is already a $2 billion business, growing at over 50% year over year, which is huge. Management's perspective on all this is understandably remarkably optimistic. Like Tim Archer noted, AI demand just consistently outpaces even their most aggressive technology roadmap projections. Literally every time they think they've modeled the ceiling for compute, storage, and memory needs, the AI industry pushes right past it. Having that kind of visibility into technology roadmaps that stretch all the way out into the early 2030s gives them deep, deep confidence in their growth trajectory. So as we wrap up this explainer, I want to leave you with this final thought to chew on. Lam Research undeniably possesses the ultimate picks and shovels for the AI gold rush, fully backed by operational excellence and a massive R&D engine. But with 43% of their revenue tied up in China, will expanding trade restrictions and a fragmenting global supply chain ultimately cap their ceiling? It's this fascinating balance of unstoppable technological momentum going head-to-head against immovable geopolitical forces. Thanks so much for exploring this with me today.